And good morning, it's Chris Mulder from Tridac Mortgage on the Danforth. Today I'm joined by a very special guest, Krista Zingel from Home Equity Bank. She's the Business Development Manager there. Good morning, Krista.
Good morning, Chris. Happy to see you. Happy to chat.
Yeah, thanks so much for joining me this morning on this call. And I wanted you to join me to talk a little bit about the world of reverse mortgages. I think there are a lot of unknown questions and myths, if you will, about reverse mortgages that I wanted to talk to you about and ask you a couple of questions. But before we get into that, what I find most interesting about reverse mortgages is that it is at the moment the fastest growing segment or niche product in the Canadian market space. What do you think that is? What is it about reverse mortgages? Why now?
That's a great question. There's a few factors. The biggest factor is the demographics. So we have, 65 and over is the fastest growing demographic. We have the baby boomers who are hitting retirement age and older. And, due to some economic forces, such as, a very financialized housing system, income growth wasn't what it used to be. Savings was, not achieved in this demographic. And, but on the flip side of the coin, they made really great moves with Canadian real estate. And so most of their savings is buried in the equities of their homes.
Right. All the lazy assets. So we'll talk a little bit about exactly what a reverse mortgage is, but it's just a great tool to allow older Canadians to unlock some of that built up wealth that they have in their real estate.
Yeah, indeed. Yeah.
Very good. So, I've spoken to a few clients about reverse mortgages, and in simplest terms, how would you define a reverse mortgage? What the heck is a reverse mortgage?
Yeah. So a reverse mortgage is a mortgage like any other mortgage, like your current mortgage that you have on your home. Home Equity Bank has a conventional mortgage product, and it is a lien on your property, just like any other mortgage lien. The only difference between ours and other mortgages is that the payments are optional.
Optional. Oh, that's very intriguing, and that's something we're going to have to touch upon a little bit more. So it's debt secured against real estate, and I think there's a little bit of a bad rap or a negative stereotype. Perhaps when it comes to reverse mortgages, that it's a debt of last resort. I mean, how do you address that?
Definitely a lot of negative feelings towards reverse mortgages. Some of that comes from some of the reverse mortgage products that we find south of the border. For example, they have conditions and features on them that are not suitable for clients. One of the biggest concerns that people have is that the bank is going to own the home. And that is not the case with reverse mortgages here in Canada. We're a Schedule I chartered bank, just like your CIBC and RBC, and we're regulated by OSFI. And the product suitability that is embedded into the terms and conditions of the CHIP, the Home Equity Bank CHIP reverse mortgage, is extremely suitable. So our clients maintain full ownership of their home. And what we would lend on their property is extremely conservative. So,
right.
The majority, 99.9% of our clients, exit the CHIP with ample equity left in their assets.
Okay, so we'll circle back on that concept there and how to think about it in terms of the equity and why it's a good choice for Canadians. But before we get there, one question that I deal with a lot is what's the difference between a reverse mortgage and, say, a line of credit, for example? What's the major difference between the two products, and where does the suitability come in?
That is an excellent question, and it actually was that very question that led me to reaching out to Home Equity Bank from my former practice. To look at working for them, because I noticed retirees that were entering into retirement with debt were using a home equity line of credit or a HELOC as a solution for this. So the two key differences between a conventional mortgage like the CHIP and a home equity line of credit is that the home equity line of credit is a collateral charge on your property. It is also classified as a demand loan. Okay, so literally the bank can, can demand repayment on that loan, convert it to a conventional mortgage with a blended P&I payment, demand repayment in full for any reason that they wish. So many different ways that you can default on a home equity line of credit. It really isn't designed for retirees as a permanent solution. And typically a line of credit has an interest-only payment geared to it. So for those retirees who are looking to improve cash flow, you're with a home equity line of credit, you're still going to have that interest payment. You don't have the permanence and the confidence that that facility is going to remain in place. You're really at the bank's whim and whimsy on that. And, with the CHIP reverse mortgage, it's a permanent lifetime approval. And so, there's very few ways that you could default on a CHIP home equity or reverse mortgage. We expect our clients to just pay their property taxes, maintain a fire insurance policy. It is to be your personal residence, your principal residence. Yeah. And to, just generally maintain the home the way that you normally would. And those are the only four ways that you could default on a reverse mortgage.
Right, Krista, and that's, I think, another aspect of it as well. We'll talk about qualification, but if you're looking at a line of credit later on in life, your income starts to diminish. You don't make as much money as you did when you were younger, and simply qualifying for a line of credit can be challenging because the bank does expect that you're earning sufficient income to carry that debt.
100%.
With the reverse mortgage, what does it take? I think you already touched upon it again, but maybe we can highlight one more time exactly what it takes to qualify for a reverse mortgage.
Yeah, so a line of credit, very, very difficult to qualify for now. But for a reverse mortgage, really it's geared to your age and the value of your real estate. There is no income requirement to qualify for a reverse mortgage. And there's also credit requirements. So those who have experienced a glitch in their credit scores, that is not relevant to us. What's relevant to us is really how old you are and the value of your home. That's it.
Right. Wow. And that's really powerful, I think, for a lot of seniors and anybody concerned even about their parents and family planning, how to unlock some of that equity that's tied up in their biggest asset. And I think that's a really unique, neat tool to be able to do that. Now, in exchange for all that flexibility, does it cost a lot of money? Is it, more expensive than conventional rates? How do you typically price a reverse mortgage?
Typically, historically, a line of credit can be priced at prime plus 1, typically around prime plus 2. Now, all the banks have raised their rates a little bit, so we're at a 0.45% premium on that. But most of our rates are, under or around the 5% mark, which is pretty good compared to, alternative lenders, that sort of thing, or definitely private lenders. But when you look at what people are, paying for, it's a lot less expensive than your unsecured line of credit, much less expensive than credit card payments. And, we've noticed that the average home of 65 plus is carrying unsecured debt around $34,000-$35,000 in Canada, across Canada. And that is very expensive. You're at rates of, 19% and above. And it's not just so much about the rate, it's really about cash flow, right? So once you're retired and you've exited the workforce and you're on, your CPP, your OAS, if you have an employer pension benefit, which only a third of retirees have, those are your income sources in addition to what you manage to save. But, Canadians in retirement need to understand that 80% of those over age 55 have less than $300,000 saved. And in fact, half of Canadians in retirement have less than $100,000 saved. So the cash flow crunch is probably more expensive than rate.
Right. Yeah, I know that. And so, and the amazing thing is, just to reiterate, is that when somebody takes a reverse mortgage, there is no expectation of payment. Instead of making payment, the accrued interest gets added to the balance that gets repaid. And when does repayment actually happen? It happens in two occasions, as I understand it, either death of the borrower or sale of the property. Is that correct?
That's right. So if our clients decide to sell and move elsewhere, if they wanted to, move in with family or downsize / right size, they decide to sell, then of course you would just pay off the mortgage balance like any other mortgage, and then also upon death. But I will note this is upon the last surviving spouse passing away. And a really common misunderstanding about reverse mortgages is that because some of our, lenders south of the border will demand repayment upon death of one spouse. That is not the case with the CHIP reverse mortgage. There are protections in there, and the CHIP just continues on until the last surviving spouse passes away.
Very flexible, and it assures, I think what it does, and how I'm using that as a tool with my clients, is it really assures families that there's continuation and that parents can stay. I know for myself, I have parents that are getting older, and that ease of mind knowing that they can stay in the home. There are options for them to access equity to cover long-term care costs or whatever ongoing costs there are, that they can remain in the comfort of their home. And I think that's a big deal for a lot of families and a lot of older people. They don't, with my brothers, we're constantly telling my parents, downsize, simplify. But I think there's a lot of emotion tied up in housing. That's where the family grew up, and they're going to want to stay there for as long as they possibly can. And this would be a tool that allows them.
That's right. And, when you look at the financial end of that, 93% of retirees wish to stay in the home that they've grown to love. It's not just so much about the house, it's about the community that surrounds them. It's where their doctors, their vets, their friends, right? The streets that they've grown to love, walking their dogs and all sorts of things. It's interesting that a third of the calls that come into our 1-800 line are actually from the adult children, right? Wanting to find ways to allow that parent to age at home with dignity and independence and not have to try and navigate a long-term care facility. Recently, we're recording this in the end of April in 2020. We have a lot of children wanting to pull their parents out of long-term care facilities and have them come home where they're safer, but they need supports in there. So it's dignity piece as well. So when you bring in a part-time or even full-time 24/7 nursing care to support your parent, you remain their child, right? There's a lot of care that can go into, as people get older, a lot of healthcare issues, mobility issues, that sort of thing. So the CHIP reverse mortgage can also, make modifications to a home to make that home safe for your aging parent. It may just be care, snow removal, light housekeeping, a shop every week to make sure that there's healthy food in the fridge, to more advanced type of healthcare. So there's some really, really great outcomes from this. And on the financial side, it's actually less expensive to import those cares than to look at a long-term care facility as well. And in addition, Canadian real estate really truly is a stable long-term investment. And so some of these properties, are worth $800,000 or $1 million or more. And, to liquidate $1 million asset that's appreciating in value, faster than any GIC rate or something like that, it's actually a savvy financial move to keep the asset intact as well.
Right. Yeah. And I love that aspect of it, especially in a city like Toronto. We're so fortunate with our real estate values because once you sell a property, you don't get back in. And the decision to proceed with a reverse mortgage sometimes comes with, well, it's debt and we don't want to take on debt. We want to leave more for our children. But I think there's an argument to be had there that by holding on to the asset and taking out that reverse mortgage, that's an appreciating asset. And in the long run, there may be more benefit for the family by allowing you to hold on to the property and have that care or have that additional cash flow from the reverse mortgage.
Oh, sure. And, for those who were downsizing is the right issue, if they were looking at purchasing a property that's in construction, but they don't have the deposits, right? The cash to make those up to 20% deposits as the property's being built. We're
Yep.
using CHIP reverse mortgage to help them, right? Acquire additional real estate, vacation homes. But also boomers understand the value of Canadian real estate better than anybody, and they want their adult children, right, the millennials, to achieve those goals too. But with the cost to get in the game is very, very high. And so, a living legacy, right? So doing an early inheritance by leveraging a CHIP in order to help your adult children get a down payment together for their own home. That's a very common reason that people use a CHIP as well. So there's, an early inheritance or a warm inheritance. And then, they're able to enjoy watching their children build their own legacy as well for their grandchildren. So it's just so many great outcomes. And I should point out that the proceeds from the CHIP are tax-free as well. So you can use, you can take it in lump sum, right? Or you can take it in small increments on a monthly basis as well. So if you're just looking to boost your income so that, you can, afford the average cost of living, which is, pretty high. It's around $50,000 on average in Canada. But if your income's only $30,000, well, you know what? You're part of a pretty big crowd, because on average, there's a $20,000 per year cash flow deficit in retirees' homes. So by using the CHIP, by drawing $1,000 a month, you can stop, taking out your investments too rapidly. We've actually seen an uptick in people withdrawing from their RRIFs and their RSPs of late. And that's taxable income. That's income that's taxed at, 30% or above. But by, leveraging a CHIP for $1,000 a month, it's an incredibly safe, right, savvy way to keep your investments intact and lower your taxation rate overall.
Yeah, well, it's no wonder. I mean, when we start getting into this conversation and start hearing about all the benefits with an aging population, we're all aware that we have this the baby boomers and the Zoomers now getting to that age. That's the biggest segment of our population. That there's so much proliferation and growth of reverse mortgages. So, Krista, before we wrap up, what are the Coles notes? What is required in order to apply for a reverse mortgage? What's the skinny on it, if you will?
It's pretty simple. Lending can be very complex, but not so with us. It's both spouses have to be 55 or over. It must be your principal residence, although we will look at doing a blanket or cross collateral on an additional property if you have an investment property, but it's geared to your principal residence. You must have a valid fire insurance policy on your property, and that's about it. Our minimum property value is $150,000, so we're able to reach even smaller communities across Canada.
Right.
And
Krista, can I clarify as well? Sorry to cut you off there. One thing I also want to clarify is that your property does not need to be free and clear. Is that correct?
That's correct. So, we often pay out residual mortgage balances, and so we want to be in first position. So we will clear off the mortgage from your existing lender, and you are now payment free, and you can, proceed to live your life on your own terms.
Fantastic. Well, that's really good. So, Krista, by way of wrapping this up, can you tell us a little bit more about how anybody who's interested in reverse mortgages can do their own homework? Are there resources available on Home Equity Bank's website?
You could go to the Home Equity Bank website. I do encourage you to reach out to a mortgage broker, who is a CHIP certified mortgage broker like yourself, Chris, because for me, it's about choice. It's about product suitability and choice. And, this isn't offered through your bank. And the 1-800 line is geared for consumer direct, but I strongly recommend that you deal with a mortgage broker, because now you've got options, right? So Chris, you have access to the banks, to all the bank lenders and alternative lenders and private lenders, right? So you're able to at least provide people options, right? So you this option, but you being a CHIP reverse mortgage specialist, if you have a client who's of a certain age, you're able to provide them with a financial illustration, right, that shows them, if they're going to borrow this amount of money over a period of 10, 20 years, right, what that will look like versus the equity growth in their home. And then your clients can make a good decision. But I recommend that you deal with a mortgage broker who has access to more than one option.
Fantastic. Thank you so much, Krista. Yeah, and on that note, so anybody who's listening in, if there are any further questions about reverse mortgages, and if they're the right choice for you or your parents or anybody that you love in your life, by all means, reach out, phone call, email. I'd be happy to chat with you about it. And on that note, we'll wrap up the call. Krista, thank you so much for joining us today. I got some great information there, and I hope everybody else listening did as well.
That's excellent. Thanks for having me. Have a great day, and we'll see you soon.
Thanks so much, Krista. Bye for now.
Okay. Bye-bye.